So my next guest says that the U.S. banking crisis is like winter in Europe, and that sounds ominous, right? I'm going to bring in Fisher Investment founder Ken Fisher. So Ken, I think of European winters as those things that change the course of history, but I think your message is a little different, right?
Well, when we think to the view that was common last year, this last winter in Europe was supposed to be virtually Armageddon. Natural gas shortages, people freezing to death, economic decline, chaos. When we instead look at what's gone on, it's been an Audrey Hepburn moment in that if you go back to the 1960s, early on, every young girl graduating from high school or college really wanted to go to Europe and hoped and dreamed that she could. Of course you could. And where they wanted to go was Paris. And now we have this month, the French market hitting all-time highs, the Italian market hitting all-time highs, Germany, a little behind, but almost there. Britain hit all-time highs, and Americans don't notice. And that's telling, because the fact of the matter is, in every bull market, every bear market, something's leading, something's lagging, always, by definition. And we need to pay attention and think globally first, because global leadership doesn't always come from America.
It seems counterintuitive, though, Ken, that all of those countries that you named, when we see Paris in the news, it's on fire. They don't want to work an extra couple of years for their retirement. When we see these other European nations, we hear about inflation that's higher than our inflation. I mean, they seem bigger. They seem like bigger basket cases than we are. So it's shocking to find out that their markets are ripping like this.
But what happened first? What happened first was sentiment got even more depressed than sentiment here. And then the reality hasn't been that bad. GDP's continued. Yes, inflation's bigger there than here. But oh, by the way, inflation is moving through the snake that I've talked to you about on your show multiple times before, steadily. You look here. I mean, this morning, CNBC came out with a survey of 400 some odd professional investors all saying that the future is going to be terrible.
Right.
And here in America.
Right.
Now, that shows you what happens when you watch CNBC. But the reality is the market's doing pretty well. We've had a bull market that started at the beginning of October and has been bulling irregularly since. NASDAQ is now just a hair's whisker under its peak in this cycle. And people have a hard time accepting all that.
They really do. And it's so interesting to me. You know, I look every single day, and initially you say, okay, maybe, you know, you look at the rationale and it makes sense. So you're honestly, you're one of the few so-called experts, and you are an expert, that came on financial television at the end of last year into this year saying it's going to be a fantastic year. Almost everyone said, no, it's not going to be. And I feel like they get locked into that position where they start to defend it. On that other thing that you were talking about, that other channel I never heard of, and other places, they start to defend it. And then it seems like they get even further behind. And at some point, they end up chasing the same names they told the audience not to buy in the first place.
So you cited my March 26 New York Post column. And in fact, the reactions to these columns are steadily snarky, negative disbelief that it could possibly actually be a bull market. But when you look at what I told you last year here, and said also on Neil's show and also on Barney, that the midterm miracle that starts with October 1st of a midterm year and continues for the next 9 months is the most consistently profitable period in all of stock market history. The fact is, through today, that midterm miracle is almost exactly on target as to the average. Volatility around the average, because every single time isn't going to be the average,
Sure.
But we're almost right to the percentage point off of the October low on the midterm miracle, 6+% in the fourth quarter, 5-6% in the first quarter. The notion of being negative in a midterm miracle period is just sort of spitting into the wind of what stock market likes to do.
I got less than a minute, Ken. This election cycle looks like it might be one for the record books in terms of ugliness, mean-spiritedness, vitriolicness, if that's a word. Will that impact the stock market at all?
Maybe in 2024, but in 2023, what we've got is relief that you can't actually get much done in Washington, D.C. And not much done in Washington, D.C. is a big improvement over a lot of bad stuff done in Washington, D.C. And that slowly settles in over those 9 months as people come to believe it's not going to be as bad as I thought it was going to be last year.
Yeah.
That's the point.
Ken Fisher, thank you so much. Always appreciate it. Thank you.
Great to be with you.